you've also put together a very investor-friendly deal structure, haven't you? Tell me something about your deal structure.
Well, I mean, always in my past, I've always had smaller fees. I'm not trying to make money on fees. I'm not trying to make money on that kind of thing. I just need to hire the best people to do the job, right? I mean, my thing is, I think of it as these are my farms too. That's how when I go out, they're my farms. I treat them like my children. I mean, that's what I do. And, so the idea of making a little extra money, charging a little extra fees, it hurts the deal. It hurts the returns, but it's not good. So what I decided is, we're going to have an 8% pref, and the investors get 8% pref on their money. Then they get all their money back. So before I get a dime, they get all their money back in 8%. Then we're going to go 70-30. And after they get double their money back, we're going to go 50-50. So, I mean, to me, you're on the house's money, you've got a good 8% in this market, for the foreseeable future is great. I think you're going to be in the mid-teens probably at a minimum level if we execute well. I mean, we've had some dislocation the last couple of years when the Trump administration put the tariffs on, because of trade embargo that, the Chinese we're not playing fairly with us. Mm-hmm. That really hurt the ag space for us shipping to China, which was an unintended consequence of the deal, but it hurt us a little bit. So things it hasn't broke our back or anything, but it made it tougher for a couple of years. So I'm not saying every year will be perfect, but I think over the 10-year horizon that we're talking about, we'll have plenty of great years, a few okay years, maybe one bad year, freeze or rain or something happens, but it'll be, a very sound programmatic investment that we can count on.
Yeah, and what I like about the structure that you're proposing is that you're going to give investors your priority is to first pay them their pref and then return their entirety of their investment and then double it. And then even after that, continue splitting profits with investors. And it's like as you get to the point where investors have a zero risk investment.
Well, the thing about it is, people work hard for their money, right? If it doesn't work really well, I don't want anything. I don't deserve, I'm going to have 10, 15% of them. I have a bunch of money in this and I'll get my money back and 8% prep also. But, I don't want to work for free either. So, if it gets really good, I want a payday too. But, it's got, if you're not delivering more than 8% and your money back, you don't really deserve anything in my mind. Plenty of people are much better deals than that. We have no acquisition fee. We have no disposition fee. Right. We want to make it on the ranch. How much we want to make it when the investors make it and the ranch pays back. So, and I have confidence we can do this. We've been doing it for 20 years. We've performed and we've had good years and bad years, but here's the thing. One really good year, you can get half the money back on the equity. It takes something, the stars got to align, but I've had years where we've made huge amounts of money on different properties because everything lined up and we had we had this peach, we had some peaches on the first property we're offering. We had one year where we got 2,000 boxes an acre and they're all giant. And, we made so much money that year that it was like 25% of the entire capitalization of the ranch on one part of it. God, so, really good things can happen, even if we don't have the oasis effect and cap rates don't compress. You still can make a lot of money at this relatively to other things.